Hi and welcome back to my channel. Today we're going to talk about my portfolio and more importantly the Snowflake IPO. It's the biggest IPO of the year and it's the largest software tech IPO of all time. There's a lot of things going on there, very interesting. And of course we can see this article down here from the Wall Street Journal. The US is going to ban TikTok downloads and the use of WeChat this week. Obviously by the time this video comes out, that will be all said and done. But again, another really interesting story that is going to have a large impact on both my portfolio and the economy as a whole, really. But on the day, we can see I'm down about $50. In the past week, up about 4% or $400. Over the past month now, up about $300. Over the last 3 months, up just over $2,000 or 24%, which is wonderful. Over the past year now, up 28% or $2,350, and all-time up just about $2,400 or 29%. The total investment in my portfolio is now $8,300, which is wonderful. It's growing every week, and so is really the gains on my portfolio. We can see the large dip there, very indicative of what the market did, and I'm very happy with that. And to get to that $8,300, I did deposit another $150 into my portfolio last week. First, I purchased 2 more shares of Coca-Cola at $50.51 each. Total cost there was $101.02. And the second purchase that I made was 0.0048 Bitcoin, $50 worth of Bitcoin. My new position is now 0.234 Bitcoin, and my price that I paid last week was $10,320.82. So that price significantly lower than Bitcoin has been in the past couple months, but that largely has to do with the fluctuation of Bitcoin. But now we're going to talk about Snowflake and why this IPO is so important. Before I talk about Snowflake's IPO, I want to remind you to subscribe to the channel, comment down below what you want to see next, and make sure to like the video. It makes a huge difference in me making a video every single week. Here we have an article from CNN Business titled "Snowflake Shares More Than Double It's the Biggest Software IPO Ever." That's correct, ever. It may still be the dog days of summer, but there was a blizzard on Wall Street Wednesday. Shares of Snowflake, a cloud data warehousing firm that has the backing of Salesforce and Warren Buffett's Berkshire Hathaway, more than doubled on their first day of trading in the biggest software IPO ever. Snowflake priced its initial IPO at $120 a share, well above the expected range of $100 to $110. That price range was revised upwards from the original expectation of $75 to $85 a share earlier this month. The ticker there is SNOW. Demand was so strong, shares finally wound up opening early Wednesday afternoon at $245 a share and quickly climbed above $300 for a 150% gain. Clearly, the shares were going to pull back. They finished the day at plus 112%, so wonderful. The company sold 28 million shares and raised nearly $3 billion from the IPO. The impressive debut makes Snowflake the largest software IPO, easily topping the 2007 IPO of Dell-backed VMware, which raised nearly $1 billion. At its closing price of just under $254, Snowflake is now valued at $70 billion. That makes Snowflake, which was founded in 2012, worth more than established companies in the S&P 500 like Bank of New York, Hershey, Allstate, as well as Dow Components, Walgreens, and Travelers. No clouds on the IPO horizon. Still, the Snowflake debut doesn't come close to making the ranks of the biggest IPOs of all time. So here they have examples of larger IPOs. Uber, clearly a much larger IPO with $8 billion there, but they do share something in common, and we'll skip down to that here at the bottom. Snowflake is one of the several buzzy unicorn startups that's been expected to go public before the end of 2020, a list that also includes Airbnb, Palantir, and DoorDash. Another smaller software tools developer, JFrog, also went public and did well. Shares rose nearly 50% from their IPO price. Snowflake helps blue chip companies analyze and share data in the cloud. So basically the takeaway here is that Snowflake is a standalone cloud infrastructure company. So they're able to do their services with Amazon's cloud software, with Microsoft cloud software, with any of those. It's very different than what anyone else is doing. But here at the bottom, they talk about one of the problems. Snowflake is not a typical Berkshire Hathaway play because it is not yet profitable, even though sales are growing rapidly. Revenue more than doubled in the past 6 months to $242 million, but the company posted a net loss of $171 million, slightly less than the loss it posted in the same period a year ago. The reason that is important is that they are losing a ton of money, but because their losses are staying somewhat stagnant and their revenue is going up, it means that they're roughly on a a positive track. Now, it's going to take a couple years for them to be profitable, but for a company that was just started in 2012 and has grown very rapidly, that's not as big of an issue. With Uber, that has been an issue, specifically with Uber and Lyft, because neither company's been able to make money ever, and everything that I've read says that may never change. They are not going to be profitable, not good investments to make. But now we'll look at the stock for Snowflake itself. And here is Snowflake's stock as promised, up about 8% on the day, back up to about $246. So as we can see, a lot of news going on with Snowflake, but we don't know a whole lot about the company as they just went public. This is not going to pay a dividend, which of course is something that I'm always concerned about, but they're losing money, so that's not going to be something that they're capable of doing. Interesting thing here on Robinhood is that it's listed at $269.50 for the IPO price. The actual IPO price was $120 and it just spiked immediately. So it is down 9% from that peak when it went public, but still very good performance considering that just about a month ago they were talking about shares being sold for $75 to $85. A little bit out of my price range right now, but definitely a stock that I want to keep paying attention to and make sure I know what's going on with it, because there's a lot of growth projected in this area. Now onto my portfolio. The first stock that we'll talk about today is Microsoft. We're going to skip Vivint Solar. I've talked about that every week for the past 15 weeks, it seems. So I now have 4 shares of Microsoft, which is awesome. Average cost is just under $181. Total return is up $77, or about 10.5%. Dividend is coming up here shortly. It's a decent dividend, but not anything huge, right around 1% here for Microsoft. So trading for $200 at the moment. On the week, down about 2%. Over the last month, down about 5%. 3 months, up 1%. Over the past year, up 46%, and 5 years now, up 361%. Of course, I like the cloud infrastructure here. I like the decent dividend. I like the track record with Microsoft, and it's somewhat in my price range compared to some of these very large blue chip stocks. So definitely one that I will continue to buy. Let me know what you think about that. What I think is the most interesting stock in my portfolio is Penn National Gaming. Of course, the report came out last week that some people think the shares of Penn National Gaming could reach up to $300 because of the release of their new app. My total return is now $409, or about 180% on Penn National Gaming, and it did go down to about $5 at the beginning of the pandemic as the casinos closed. So up 26% on the month. Over the past 3 months, up 113%, and when we zoom out to the year, we can see it was down to $452. I wish I would have had the wherewithal to buy as many shares as possible at that time. I didn't. It's okay. I think there's still a lot of room for growth here. I think it's a good company, especially with that Barstool acquisition past year. But let me know what you think about the gaming industry or just this stock pick in general. As I mentioned earlier, I did purchase 2 more shares of Coca-Cola. I'm up to 12 shares now, and this will actually be my largest single dividend that I receive here in October, which is awesome. It'll be right around $5, $4.92 if I remember correctly. My total return now is down about $11.50 here, but the strong dividend and the strong track record over time, especially with that dividend that of course is going to grow. It's going to increase every single year, just as it has for the past 55 years. So for the past week, down 1%. Past month, up 5%. 3 months, up 7%. Over the past year, down about 6%. And 5 years, up 32%. Definitely a questionable pick in a lot of people's eyes, but still an 81% buy rating here. Of course, this is a favorite of Warren Buffett's and something that I definitely want to continue to purchase and have in my portfolio. Next up is Walmart, a stock that's been very consistent for me, especially through the ups and downs of the pandemic. Walmart has stayed solid, which is why it's in my portfolio. So the total return here is up about 12%, or $28. We can see the dividend yield is about 1.6% right now, so not huge. But an interesting thing to point out is the price to earnings ratio is only about 22. I read the last week that the S&P 500 now has a P/E ratio of approximately 33, which is about the highest it's been in 20 years, meaning the prices of these stocks are inflated compared to their performance, and Walmart being under that at about 22 is awesome to see because it means there's still room for growth, and this is not inflated at all. So over the past week, down a minuscule amount. Over the past month, up 2%. 3 months, up 15%. Over the past year, up 16%. And 5 years now, up 110%. Not factoring in that dividend, which is, of course, going to help me out just a little bit every year. Definitely something I will continue purchasing. And the last stock for today is going to be KeyBank. I don't actually like this one, and the reason that we're going to talk about it today is I'm considering dumping this to purchase more Bitcoin or perhaps another stock, and I'd be interested to see what people think about KeyBank. 48% hold rating here on Robinhood. Total returns down about 20%. pandemic hit the banks very hard, especially KeyBank. So I'm about 3% a month. Over the past 3 months, down 5%. Over the past year, down about 30%. And 5 years now, still down about 6%. Clearly not a good investment, but the two options here would really be to hold or to sell and try to purchase something else. I don't like to move stocks around too much, but it's a very small part of my portfolio and something that I'm not super interested in for the future. Only makes up about 0.7% of my portfolio. Earnings-wise, we can see they've struggled the last 2 quarters. We can see my dividend has been consistent at $1.11 the past few quarters, but definitely not a stock that I'm tied to. And like I said, I'd be interested to hear what people think about selling this to buy Bitcoin. And of course, we've got to talk about Bitcoin. It's the largest holding in my portfolio. My equity is now $2,546, up about $301 all time. Down a little bit on the day, but not a whole lot. Makes up almost a quarter of my portfolio. And I say it every week, but I think that Bitcoin's going to peak at the end of next year, which is why I'm trying to build up that holding in Bitcoin as much as I possibly can, and of course, to sell it then. So over the past week, we can see up about 5%, which is awesome. Over the past month, still down about 9%. 3 months up 15%, over the past year up 7%, and 5 years up 4,600%. I'm not super concerned with this one week to week. In fact, I would like to see the price go down now so that I can purchase as much as humanly possible before that price peaks at the end of next year. Average cost, of course, is creeping up a little bit every week, but I'm very comfortable with that position that I have at 0.234 Bitcoin. My hope would be at the end of the year I can be somewhere around 0.3 to 0.33, somewhere around a third of a Bitcoin. Towards the end of next year, I would like to get this up to a whole Bitcoin if possible, but of course with that price continuing to rise, it's going to be more difficult, and I wish I could have purchased sooner. But thank you for watching to the end of the video, and I'll be back with another one at the end of next week. Thanks.